Welcome to lesson 3, and in this lesson we'll be talking about different trading tools used in the forex market or used to analyze different pairs to predict what the market will do, whether we should be buying or we should be selling. There are a lot of tools that are made available for you to aid you in your trading and aid you in your analysis. The very first of these that we'll be looking at will be indicators. What are indicators? Just as the name implies, indicators are simply mathematical formulas programmed in order to aid you analyze or predict the price movement. Note that the price of assets is represented in the form of what? Candlesticks or line charts or bar charts, as we talked about in the previous class. This is what we call price action, how price is represented on your charts. But some set of persons have come up with several indicators in the financial markets, saying that instead of you stressing yourself to study the price, just watch the indicators and then you'll be able to know what the market is doing. Take note that what indicators are not the best when it comes to trading forex. They are shortcuts, and you know generally anything about shortcuts. All right, you need to understand price action. If you understand price action, you will need little or no indicators. I'm not here to talk about them, and by the end of the class, I'm going to give you about 1 or 2 or 3 indicators that may help you to confirm what price action is doing. Professionalism in the forex market has to do with understanding price action, understanding the movement of price, understanding the story that the financial asset is telling you by looking at the graph, by looking at the chart. All right. How do I activate indicators on my charts? Now, let me show you. You see this, notice this F sign, or you simply click on your empty chart. That is for phone and not for laptop. For phone and tablets, you simply click on your screen. The moment I clicked on my screen, you will see this round, a circle with different icons, and then inside this circle you will still see your F. When you click on this F, it will show you several indicators. What this means by main chart is that this indicator I'm about to add, or whatever indicator that you want to add, will appear on your main graph. There are indicators that will appear maybe below your charts or below your graph. But by this main chart, it means that was the moment I click on plus, and now I'm clicking on F plus sign, you see, I will be shown different indicators. There are thousands of indicators out there, but this is my counsel. Study price action. It is the best. Price is price at all times, but indicators, they have one disadvantage, which is what? They lag behind price. Indicators are built based on price actions, but if you must use indicator, make sure that you are using indicators as a confirmation tool. As time goes on, I'm going to teach you just one indicator that you need, or 2 of them that you need out of these thousands, just to confirm your price action. But this course, I'm teaching you basically price action. You need to understand the story that price is telling. That is how to really remain in this industry for a long time. So you can see series of indicators: average directional movement index, Bollinger Bands, envelopes, Ichimoku, Kinko Hill, moving average, a lot of them. That is how to put your indicators. The next thing we'll be looking at will be crosshair. This tool here, crosshair, this tool is also on your laptop, right? So what this indicator does is that the moment you click on it, I'm clicking on it now, you will see this. You can move it around. For, let's say you want to know this high here, you want to know what price is it that is here, you just carry this indicator and you place there. Now when you place it, look at this, it will indicate the price. It is used as a cursor Yes, as a cursor to indicate price of asset. You can see this very candle. You can also see time and date. So you want to know the exact price or the exact date or time that a particular asset, a particular candlestick was formed. So you can use this crosshair as your cursor to pinpoint the exact price and date or time, whatever thing you want to find out. All right. The next thing that we'll be looking at will be objects. Now, look at this icon by my right. You will see like a mixture shape of rectangle, triangle, and circle, right? The same way, you can also see when you click on your screen on your chart, you will see it as well. This is it, right? Now, this is a tool that is used to analyze your chart, to mark places, to draw lines and all of it. Let me quickly click on it. I click on it. You can see, you will see plus, add object. I'm going to click on the plus to add object. These ones are the ones that are already on my chart. I will add new one now, plus. So you will see vertical line, horizontal line, trend line. You will see all of these channels, Fibonacci retracement. Let me click on rectangle, for instance. I want to draw rectangle. You just drag it, click and drag. I want to mark this zone. You use this rectangle to mark, right? Then let me go back to it. Click on the object again. I want to use horizontal line to mark this place. I'll use it and mark. Horizontal line, you can use it to mark out a zone, and it will also show you the exact price. We are coming to how to use all of this, but note that you use them at your own convenience. There is no special way to use a rectangle or whatsoever. These are the objects that you have. A lot of them, you can explore them, just explore. You will not be using all of them. Mainly I use about 3 of them. Basically in my trading generally, I use the horizontal line, trend line once in a while, and then I use my Fibonacci retracement, which is this one, and then I use my rectangle a lot to mark zones. The next thing we are going to look at is very, very important. It is called time frame. Time frame. This is one of the most important tools in the financial market. You need to understand this. The candle you can see on my chart represents different time frames. Let me explain. Please follow me. Watch here. I click again on my chart, empty chart, and this circle comes out. You can see 15 minutes, 5 minutes. Currently, I'm in 5 minutes. You can look at this. Gold in 5 minutes. You can see 1 minute. You can see 15 minutes, 30 minutes, 1 hour, 4 hours. Daily means 1 day. Weekly, that is 1 week. Monthly, that is 1 month. Do you know what this means? What this means is that for each of these candle, any time frame I am in, currently I'm in 5 minutes. It means that this candle, one candle in this time frame represents the price movement of gold in 5 minutes. Price movement of gold in 5 minutes. Now, let me put it in 4 hours. Let's look at this in 4 hours. You know what this means? 4 hours means that one of these candle represents the price movement of gold in 4 hours. I'm currently in 4 hours. You can see it by the left hand side. It means that in 4 hours, the price of gold moved from here to here. This is a bullish candle, remember, and bullish candle is from down to up. Bearish candle like this red one is from up to down. You remember that in our previous lessons, right? Now, this candle you can see now that the price is still fluctuating. Once 4 hours is completed, this candle will close and another candle will start beside it. All these time frames, they are very, very important. In fact, you do your analysis professionally in these different time frames. All right? Let me put it in 1 month. This is monthly. You can see here, monthly. You know what this means? The price of gold in 1 month for this red candle is this. This is the whole month. That is the last month. We are currently in the month of October. You will keep seeing it moving up and down. It will only close after the month of October has concluded. But this is the price of gold for the whole of September. Discount. It means that the price of gold moved all the way. Let me use rectangle now to depict the price. I'll put rectangle below the red candle so that I can pick the prices for the sake of this teaching. And then up here, right, you can see that. Now, what does this mean? This means that in the month of September, that is last month, the price of gold crashed from 19, you can see this price here, $1,952 approximately, or 1,952.73 cents, crashed from there till $1,844.95. I'm not using the cent part. That is what this means. One candle in any time frame represents the price movement of that very asset in that time frame. By the time we have next Monday, the candle will close. That is how these things work. When we start analysis proper, you will start seeing how we combine these different time frames. You now combine the whole information and make your decision. It is very, very simple. I'm telling you, it's not something very complicated. I'm going to teach you the way you are going to understand it, and you would believe with me that this is a very simple course. That is it for time frame. All right, let's move over to lesson 4.